Let's look at today's markets more closely now. Skyler Weinand is with me. He is Regan Capital's Chief Investment Officer. Skyler, good to see you, especially on set. Sort of kind of big picture here, Skyler. You say the markets could be, you say, underestimating the Iran risk, meaning scope, duration. Walk me through it.
All of the above.
Yeah.
Talk about second order effects here, and even third order effects, where the idea was to go in and take out the Iran leadership. But now you have Iran coming back and bombing almost all the Middle East and cutting off the Strait of Hormuz, which is upwards of 30% of where the oil goes through in the world here. So you have all of that combined. And if we take a step back and think about the State of the Union address, which wasn't too long ago, and what Trump came out at the beginning of the year, what were the large goals? Get housing prices down, get affordability up, and help out Main Street this year. He announced on January 8th, the GSEs were going to purchase $200 billion worth of mortgage-backed securities. Mortgage rates got to 5.95 or so. Now they're back up to 6.25 or above. Why is that? Well, inflation, gasoline. Gasoline's up 75 cents in the last 10 days. Oil, energy prices. Add to that just confusion around tariffs, and he's not going to get help from the Fed anytime soon because there's no real impetus for the Fed to cut. Even if unemployment's a little bit weak and inflation is not that bad. So second, third order effects we're seeing, but when it comes back to Iran, it's both, this could go on for months, if not a half of a year at least. And then the scope where Iran all of a sudden starts bombing almost every single country in the Middle East. You can't get out of Qatar. You can't get out of Doha. You know, we have folks that are stuck paying $200,000 to fly a plane out of there just to get out.
Scott, to your point, though, and I agree, it does look like the market is betting like this is shorter rather than longer. Why do you think the market is making that assumption? Why is the market acting like that?
The market hates uncertainty. So it all comes down to just not being certain. So you saw that huge price action when Trump came out just recently and said, hey, this is almost over. So you saw oil go from 110 to $90, $85 real quick. So that's all they're waiting for is some type of finality. But even with IEA coming out today and saying we're going to produce we're going to take all of this stockpile offline in terms of oil and push it out into the market, oil's actually up today $4, right? So we're waiting. The biggest risk, the biggest fear of the market is that this is unknown, that it could go on for another 6 months. And that's going to fuel inflation. It's going to fuel volatility. Stocks really haven't done much in the last 4 or 5 months. And then you have this market shifting. And God forbid we go back to this AI story where AI destroys software. So for right now, you actually have this distraction in the market and you have this rotation. Equal weighted stocks are actually up 4 to 5% this year, whereas the market weighted indices are down a couple percent.
Is that shift away from big tech, you're making that point, is that equal weight versus space, is that temporary, Scott, or no, you think something more structural has shifted?
I think structurally, private equity-backed companies, i.e. software, which are 20 to 25% of private equity and private credit, they went way too far. And they were trading at way too high multiples. There was way too much ambition in the prices and where these things were trading on a PE basis. So we're going to see some pullback. But this AI revolution here is real. The last guest was talking about 7-year-olds. My 9-year-old, my 10-year-old, they're designing class projects on AI already, right? So software, there's going to be big pockets of software that are dead. We're talking Salesforce. We're talking Infosys. We're talking a lot of companies out there whose models were built around subscription-based services. And so you take private credit, a lot of these private credit loans to these software companies are called ARR, annual recurring revenue loans. These companies have no collateral. Their buildings are worth nothing. They have people, but then everything else is just the subscription business. So when businesses like mine start automating a Salesforce, their CRM, they start automating let's say some of their other software, like a Bloomberg, where I'm paying $300,000 a year to Bloomberg, all of a sudden that ARR might get cut in a quarter or a half, and those loans are kaput. And you're seeing that in stock market valuations, which might come down 25, 30% in that sector.
Let's end here, Scott, because listen, given your point, a lot of big questions. We don't know how long this war is going on for. We don't know how long oil disruption lasts. That doesn't mean you don't see some opportunities, some names. One, I know you like Weyerhaeuser. Explain to viewers why that's a buy.
Weyerhaeuser is the largest owner, the largest public USA landowner in the market, in the world. Okay, they own almost 13,000 acres. I had a pick at the beginning of the year, Texas Pacific Land Group, TPL. They own 900,000 acres. Texas Pacific Land Group is now a $35 billion company. Weyerhaeuser is only a $17 billion company. And Weyerhaeuser makes $7 billion a year, okay, in revenue. So you have this huge landowner that could morph into a data center supplier, an energy supplier. Yeah, they're a paper company. They're a lumber company. We need lumber. Commodities are up. Those are all good things. But you have almost 13 million acres of land available in the public market for sale.
How many acres, Skyler?
Almost 13 million acres.
Wow.
Biggest landowner that's a public company by far.
Yeah.
And it's only a $15, $16 billion company. So really, really cheap relative to a lot of what else is out there in the market. And when you think about some of these AI companies that are just, we're close to power. So we're really, really valuable, right? Multiply that times 50 or 100, and that's what you get with Weyerhaeuser.
Scott, it was so good to see you, especially on set. Thank you, sir.
Thank you.